This is Alpha Market Meridian. I'm your institutional market trader Eric, and right now Bitcoin is setting up for a decisive move that will wipe out one entire side of the market within the next 48 hours. T the time of recording, BTC is holding steady at $81,445, barely up $15 on the day, essentially flat price action on the surface. But beneath this calm consolidation, the hourly chart is screaming overbought conditions. Stochastic RSI is locked at 100, CCI surges to 174, and Williams percent sits at -1.88. Meanwhile, the daily time frame still signals a strong bull trend overall. We are seeing extreme multi-time frame tension building right now. The 4-hour MACD has just flipped bullish, daily moving averages remain perfectly stacked to the upside, yet 1-hour momentum indicators are stretched far beyond normal ranges. A sharp price snapback is overdue. Today I'll break down the exact critical level that separates trend continuation from a fake-out reversal, plus 3 precise trading strategies: scalping, swing trading, and an aggressive bull trap play, all laid out with exact price levels and clear risk parameters. Stick around until the end, because I'm revealing a hidden pivot structure signal most retail traders completely ignore, one that clearly shows where major liquidity pools are positioned. Direct market conclusion. Let's cut straight to the core market truth. Bitcoin remains in a solid daily uptrend, currently pressing into a key resistance zone between $82,000 and $82,700. A zone that has already rejected price twice in the past 24 hours. I classify the immediate bias as bullish consolidation, pending either a clear breakout or a sharp rejection. The definitive bull-bear line sits at $$80,800 days sustained 1-hour close below $80,800 flips short-term market structure bearish, opening a drop towards $79,900 pivot support, followed by the $77,900 4-hour demand zone day convincing 1-hour close above $82,700 with rising volume invalidates current overbought warnings, clearing the path toward $84,900. The key 3 weekly resistance level. Right now price is trapped tightly inside the $80,800 to $82,700 range, and market volatility is coiling for a large imminent move. My base case setup: we'll see a quick fake-out dip below $81,200 to liquidate early long positions, followed by a sharp breakout rally above $82,000. I'll walk you through every technical and fundamental detail so you trade with structure, not guesswork. Before coming to your technical deep dive, please subscribe my channel and give a big thumb. Pull up the lower timeframes first. The 1-minute through 30-minute charts flash generic strong buy labels across most platforms, but we need to dig deeper beyond surface signals. The 1-hour technical summary has already shifted from buy to neutral momentum. Immediate pivot resistance sits at a $81,836. Then a 2 at $82,764. Key pivot support lands at $179,896 and $278,884. This is your active trading battlefield. 1-hour RSI reads 68.9, not fully overbought yet but rapidly approaching critical territory. Stochastic sits at 95.6, deeply overextended, with stochastic RSI maxed fully at 100. This combination confirms buying at current levels is pure trend chasing, entering into momentum exhaustion with no healthy pullback in place. 1-hour MACD remains positive at 2028, yet histogram bars are visibly flattening, showing clear momentum deceleration. CCI hits 216, firmly overbought, and Williams percent are locked at -1.88 near extreme oversold for bears, extreme overbought for bulls. The 1-hour chart sends one clear message: expect a pullback toward pivot support or the 20-period moving average before the next major directional move. Zoom out to the 4-hour chart for the bigger picture, and the outlook turns far more bullish. 4-hour moving averages: MA5 $79,881, MA10 $78,344, MA20 $77,620, all sloping steadily upward, acting as strong dynamic support. The 50-period 4HMA rests at $73,070, with a 100-period MA at $71,982. Price trades comfortably above every major moving average, confirming bullish trend expansion. The 4H MACD has just triggered a fresh buy signal at 2028, while ADX reads 45.9, a clear strong trend reading. Midterm momentum remains firmly with the bulls, which is why aggressive short positions are high risk unless we break and hold below $80,800. Volume profile highlights heavy trading activity near $80,500, marking this zone as strongly defended institutional support. The daily chart is where we confirm. Macro trend validity. Daily overall sentiment registers a strong buy. Daily moving averages. MA5 $77,296, MA10 $72,748, MA20 $76,683. The 50-day MA sits far higher at $94,909 as long-term overhead resistance, while the 200-day MA rests at $60,190, far below current price and solidifying the macro bull market structure. The MA5 and MA10 have already formed a bullish crossover, now poised to cross above the MA20, creating a mini golden cross structure on the daily time frame. Daily RSI sits at 50.2, perfectly neutral after resetting from prior overbought levels, an ideal setup that leaves plenty of room for further upside without immediate overextension. Daily stochastic reads 90, nearing overbought territory, though in a strong established trend, stochastic can remain elevated for multiple trading days. Daily MACD is still negative at -5,213 but converging sharply. A few more positive daily candles could flip MACD bullish, unlocking a wave of systematic institutional buying. The weekly chart provides our highest time frame context, and the signals remain powerful. Weekly pivot point lies at $77,709, with S1 support at $75,957 and R1 resistance at $80,437. Price has already broken decisively above R1, now testing a 2 at $82,189, aligning almost perfectly with our daily $82,700 resistance cluster. Weekly R3 sits at $84,917, our primary upside extension target. Weekly moving averages reinforce the bull structure. MA5 $77,296, MA20 $76,683, MA50 $94,909, and the critical 200-week MA at $60,190. This 200-week level has acted as the backbone of the entire bull run. Price has never sustained a close beneath it, and we currently trade vastly above this key baseline. The broader macro trend remains unequivocally bullish, and a weekly close above $80,400 will further strengthen upside momentum. Only a weekly close below $77,700 would trigger a meaningful warning signal. For now, all higher time frame structure favors holding long positions over aggressive short bias. Next shall be fundamental driver analysis for today's Bitcoin trading to what's fueling this technical range battle right now. Market news flow is mixed overall, with a subtle risk-on undertone dominating sentiment. A senior director at Strategy Inc. recently offloaded $366,500 in company stock, a piece of insider corporate selling that typically sparks cautious sentiment toward equity-correlated assets like Bitcoin. Even so, BTC price holds firm without heavy downside pressure. We've also seen speculative tech names like Microcloud Hologram rally sharply on quantum cryptography narrative hype. While this isn't direct Bitcoin buying demand, it reflects renewed appetite for tech and speculative growth assets, sentiment that regularly spills over to boost Bitcoin as a leading risk asset. Bitcoin ETF flows over the last 24 hours show mild positive net positioning. We aren't seeing massive institutional inflows, but no major outflows either. This signals large institutional capital is waiting for clear confirmation, most likely a breakout above $82,700, before deploying larger position sizes. Macro backdrop adds further context. The US dollar index stabilizes near 103.5, Treasury yields edge slightly lower, and the S&P 500 grinds higher while showing early signs of momentum exhaustion. The critical correlation to watch. Bitcoin now trades tick for tick with the Nasdaq. Any intraday tech stock pullback will pressure BTC, while sustained risk appetite pushing S&P to relative highs will easily fuel a breakout above $82,700. Conversely, sudden risk-off triggers, geopolitical escalation or unexpected hawkish Fed commentary, will pressure both equities and Bitcoin, immediately testing the $80,800 support floor. Gold is also coiling tightly near $2,150, keeping the long-term inflation and currency debasement narrative intact, which continues to underpin Bitcoin's value proposition. My 1 to 2 week bias remains bullish, targeting the $84,900 zone, as long as the $80,800 support level holds and no negative macro shock emerges. Key headline risks that could derail this setup: stronger than expected US labor data triggering hawkish Fed rate cut repricing, or an escalation in global trade tensions. Keep a close eye on FOMC minutes and unscheduled Fed speaker commentary ahead. Please subscribe MY channel for trading entry set UP, take profit and stop loss levels. Let's translate this full analysis into 3 actionable trade setups, rank from conservative to aggressive, each with defined entry, stop loss, targets and risk reward. Strategy 1, conservative high probability play. Built for patient traders who wait for clear confirmation. Wait for the 1-hour chart to pull back toward the 4-hour trendline support near $80,900, while 1-hour stochastic resets from overbought back below 30. Enter long on a bullish engulfing candle forming above $81,100, with price holding firmly above $80,800. Stop loss placed at $80,690, just beneath the critical bull-bear line and 1-hour pivot support. Target 1. $81,800, a 1 pivot level, 4 partial profit taking. Target 2, $82,600, just below major resistance, risk per trade $410. Reward to target 1 $700, 1.7 RR, reward to target 2 $1 500, 3.6 RR. Invalidation rule: any 1-hour close below $80,800 invalidates the long setup. Exit partial positions and remain flat, as price will likely correct deeper toward $79,900. Strategy 2, standard balanced risk, a reward play. Ideal for fading short-term overbought momentum inside the range. Only enter short if BTC rallies toward $82,350 and the 15-minute chart prints a lower high with clear RSI bearish divergence. Entry zone, $82,300. $82,400. Stop loss, $82,750, above recent daily highs and major resistance. Target 1, $81,500, target 2, $80,850 directly at the key bull-bear line. Move stop to break even once target 1 is hit. This is a counter-trend scalp exploiting stretched hourly oscillators, while respecting the larger daily uptrend. If stop loss is triggered, the breakout is confirmed. Immediately shift bias to long setups. Risk per trade $350. Reward to T1 $800. Reward to T2 $1 500. Strategy 3, aggressive breakout front run, for experienced traders comfortable with fast volatile reversals. With 1-hour stochastic RSI locked at 100, a rapid flush lower is highly probable. Enter short at market near $81,400 with a tight stop loss at $81,750, risking only $350. Target 1, $80,950, target 2, $80,600. This setup bets on a gamma squeeze flush, targeting a quick $500 intraday drop from overbought levels. If price holds $80,800 after the dip, reverse position to long with identical risk sizing. Critical warning: this strategy requires real-time chart monitoring and full acceptance of potential immediate breakout stopping you out. Only recommended for professional active traders. Please always remember, position sizing is everything in this market regime. Regardless of setup conviction, never risk more than 1 to 2% of total trading capital on any single position. With upcoming US session data releases raising volatility risk, halve position size if taking the aggressive setup. Ahead of major economic news releases, tighten stop losses or close active positions entirely, re-entering only after initial volatility spikes settle. Hard fixed stop losses are non-negotiable. They are your capital survival tool in a market capable of $2,000 single-day swings. Protect capital first. Consistent profits follow from disciplined structure. To recap, Bitcoin sits at a make or break. Technical junction. Daily trend remains firmly bullish, while hourly momentum is overbought and coiling for large move. The line in the sand is clear at $80,800. Hold above this level, and we target $82,700, then $84,900. Break and close below, and price heads towards $79,900 followed by $77,900. Tomorrow's key focus will be post-range follow-through and ETF flow data confirming institutional conviction. I'll be back same time to break down 8 major assets, including setups for US dollar to Japanese yen, Nike synchronized moves, and what gold's current consolidation signals for crypto overall. Hit subscribe and turn on channel notifications. Missing these key price levels can cost you serious market opportunity. I want your take below. Are you buying the pending dip, or shorting this overbought rally? Drop your personal BTC bull-bear level in the comments. I read every top comment and regularly pin the most accurate analysis. If this breakdown added clear value to your trading, leave a like to help more serious traders find this channel before the big breakout. This is Alpha Market Meridian, signing off. Trade the levels, never trade the emotions. I'll see you tomorrow.